All right, folks, my next guest is looking ahead to earnings season. By the way, that kicks off when J.P. Morgan posts their results on July 14th. With me now, Traderade co-founder Ayesha Tariq. And Ayesha, so what exactly are you expecting? Because right now, everyone's talking about, the earnings recession. It's going to get worse, tough comparisons. Do you see anywhere we can see positive surprises?
Hi, Charles. Thank you for having me back. So, look, I agree with them. I do think that we're going to have tough comparisons, and I think that we are going to have an earnings decline. But where we see positives is in the services sector. So we know that the labor market has been strong in the services sector, and we see particularly healthcare, travel, and other services coming in stronger during earnings season.
Your thoughts. I was able to ask David about this. I want your thoughts also, because I hadn't been talking about this on the show lately, but buybacks and the role that they're playing in this rally.
No, absolutely. I think buybacks are going to be the wild card going forward for this year. We've seen companies authorize a very high level of buybacks, but unfortunately, they aren't really buying back stocks as much. We've seen a decline of about 9% until May, and we see a further 17% decline for the entire year. So I think that's going to get a little tricky. I don't think people appreciate how much of a lift buybacks give to stocks.
Let's talk about what you like here. I know you like mid-cap value and growth. Mid-cap has done pretty well. Last week, it really started to shine. But you do have the caveat is that you got to get positive cash flow. So I want to take a look at the MedTech. Medtronics, that's a name that's been around for a while.
It has been around for a while, and I think they've been under-earning, in fact, because of a lot of backlog and deferrals in surgeries over the last 3 years. In fact, it's estimated that about 500,000 hip and knee replacement surgeries were deferred over the last 3 years. And I think MedTech is in a great position to, benefit from that.
Packaging, you like Ball Corp. I like this play. I was watching the chart the other day. It was maybe like a 30-year chart. And this is boring, right? They make, containers and aluminum cans, but we use that stuff all the time.
Absolutely. So we don't think people are going to stop drinking from aluminum cans anytime soon. And the company's actually done very well over the last 3 years. What they've done is they have done all their CapEx expansion spending when rates were low. So they've actually expanded capacity nicely. And with aluminum, a margin expansion for them, growth here. Slow growth, but we still think this is a defensive name that could be good to have. Yeah,
I'm looking at the chart back in April of 2000. It was $1.74 a share. It's 57 now. Just imagine. Hey, I got less than a minute to go. You like cybersecurity. Everyone likes cybersecurity, but I haven't seen too many people say that they like Juniper in that space. It's been the bigger names. What is it about Juniper that you like here?
So you're right. Juniper has been very underappreciated, but it's really reasonably valued here. They have a great backlog. They're increasing their gross margins, and they're in fact a triple play company that provides a backbone for cybersecurity, for cloud infrastructure, and for machine learning, which is, AI. So we see them as poised to grow from here for the next 2 to 3 years, and a great stock to have in the portfolio.
I got to tell you, Ayesha, your work is fantastic. I'm glad you took some time to come on the show. Thank you very much.
Thank you so much.
Of course, we'll be watching those picks, though, so I'm going to hold your feet to the fire when you come back.